Going to enter into the trade, we need to always analyze the chart in multiple time frame. Hi friends, Chitra here. Welcome to my YouTube channel. Today we are going to see the two powerful candlestick reversal pattern, that is the morning star and evening star candlestick pattern. Okay, so how to enter into the trade if we can see these two candlestick pattern. Alright, so first we can see what is called morning star candlestick pattern. So morning star means that the pause for the downtrend and a new uptrend, that is a bullish trend, is going to happen. Alright, so for this we can see the candlestick which consists of three candlesticks. So for morning star, already the trend is in the downtrend and we can see one red candle. After that, indecision candle, that is a doji candle, and the third one will be the green candle. Okay, so the new uptrend is going to happen and we can see this particular morning star pattern at the support level. Then what is the next pattern? That is the evening star pattern. All right, so evening star candlestick pattern we can see at the resistance level. This is also called three candlestick pattern. We can see the trend is already in the uptrend, and at the resistance level we can see one green candle, that is the first green candle, and after that doji candle, which is an indecision candle, and after that the third candle is a red candle. All right, so we can consider entering into the short trade if we can see this particular types of candlestick. So we can use this candlestick pattern in any time frame, depends upon which type of trader we are. So now we can look into the video. So what is morning star? Morning star is a visual pattern consisting of three candlesticks, okay, that are interpreted as bullish signs by the technical analyst. A morning star forms following a downtrend and it indicates the start of the upward climb. Here we can see this is the downtrend, and after that we can see that there is a doji formed. So this doji indicates that it is an indecision, okay. So after that, this high of this doji is taken away and we can see that green candle is formed. So that there is a pause for the downtrend and a new uptrend is formed. Okay, here we can see that there is an uptrend. So we can enter long trade above this green candle, It is a sign of the reversal in the previous price trend. So this is a downtrend, so that there is a reversal happened. So new trend is formed. Technical experts view morning stars, a visual pattern made up of three candlesticks, as optimistic indications. So how the morning star is developed? So morning star develops in the downtrend direction and marks the beginning of the ascent. Alright, it indicates a change in the prior price trend. What is called the prior price trend? So the prior price trend will be the downtrend. Here we can see this is a downtrend, and after that a doji candle is formed. So again the high of this doji candle, again we can see one green candle. So we can see three consecutive candles are formed. This is called a morning star because this is a downtrend, and after that doji is formed, again green candle is formed. Alright, so pause for the downtrend and a new trend is formed. A bullish candlestick pattern that develops over three candles is called morning star. It is a pattern that reverses the downtrend, so that there is a reversal of the downtrend, that is called an uptrend. Three consecutive candles are combined to create this pattern. This is called morning star. How to trade a morning star? Morning star patterns can be used as a visual sign for the start of the trend reversal from bearish to bullish. So there is a downtrend, that is bearish trend. At the support level, we are getting a doji candle after the red candle. Again, the third candle is a green candle. So we can consider entering into the long trade, so that there is a trend reversal from bearish to the bullish. But they become more important when other technical indicators back them up, as previously mentioned. So we have to consider into some other technical indicators to confirm that there is a trend reversal. Okay, so what can we look into? Another important factor is the volume that is contributing to the pattern formation. So volume plays a major role before entering into the long trade and before confirming that there is a trend reversal. Okay, before entering into the long trade. A trader will take a bullish position in the stock as the morning star forms in the third candle and rides the uptrend until there are indications of another reversal. So once this morning star pattern is formed, a trader will enter into the long trade, okay, and after looking into the other technical indicators as mentioned like volume, so you can look into some other technical indicators also or technical confirmations also before entering into the trade, and we can continue the ride until we get some other indications like bearish candle is forming. Okay, what is a evening star? Okay, evening star is a bearish reversal candlestick pattern consisting of three candles: a large bullish candlestick, a small bodied candle, and a bearish candle. So how this bearish candlestick pattern is formed, that is an evening candlestick pattern is formed. First is the green candle, that is a large bullish candle, a small bodied candle, that is a doji candle, that is an indecision candle, and the third candle, that is the bearish candle, that is the red candle. So this is how the evening star pattern candlestick is formed, and this candlestick pattern should form at the resistance level. Evening star pattern appears at the top of the price uptrend, top of a price uptrend, that is the resistance level, signifying that the uptrend is nearing at its end. So the pause for the uptrend. So what is the evening star? The evening star consists of three candlesticks, with the middle candlestick being the star. So for the evening star pattern, we could see that there are three candlestick patterns formed. Okay. So what we can see what is called an evening star and how can we confirm that evening star pattern is formed. The evening star consists of three candlesticks with the middle candlestick being the star. So for the evening star candle pattern, there should be three candlesticks. The first candlesticks in the evening star must be a green candle and must have a large body. The second candlesticks is the star, which is the candlestick with the short body and does not touch the body of the first candle. So the second candlesticks in the evening star should be the doji candle or a spinning top candle. The gap between the bodies of the two candlesticks is what makes the doji or spinning top a star. The star is the first indication of the weakness in the market, and it indicates that the buyers were unable to push the price up to the close much higher than the close of the previous trend. So what indicate the weakness in the market? Okay, the spinning top or the doji candle. So the green candle is the first candle, second is the doji or the spinning top. So that indicates the weakness in the market. Okay, that is buyers are unable to push the price up. This weakness is confirmed by the candlestick that follows the star. The third candlestick must be a dark candlestick, that is a red candlestick that closes well into the body of the first candlestick. So till now we have seen the different patterns, that is the morning star and evening star. Alright. So now we will see in the chart how can we enter into the trade if we get the morning star or evening star. So this is a Bank Nifty chart. Okay, so I have taken the 5 minutes time frame. So we can look into any time frame. All right. So now we will see the evening star pattern. Okay. So here we can see this is a Bank Nifty chart. Okay. And here we can see that there is here this is the support. So we will go to the horizontal line and we will mark the line here. This is the resistance, major resistance for Bank Nifty. So why this is a major resistance? Because on 17th Jan, this particular level is the support. Okay, Bank Nifty has taken support multiple times, and after that when we get any breakdown, we can enter into the short trade. Alright, so that particular level will act as a resistance. Okay, so here the trend is uptrend, that is gap up opening, and after that the trend is an uptrend, that is bullish trend. Alright, and here we can see this is the green candle, and after that we got a doji candle, means indecision candle. Okay, so means that there is a pause for the uptrend. After that, if we get the third candle is a red candle. So this three candle pattern is called, what we call this pattern is called, this pattern is called the evening star pattern. So where we will be entering into the short trade? We will be entering into the short trade below the low of this red candle. So we can keep the stop loss high of this doji candle. Okay. So once we enter into the trade, see the fall from that particular level, from the particular resistance level. All right. So you can enter into the trade below the low of this red candle, and you can keep the stop loss above. Here you can keep the stop loss. So the entry is here. This is the entry for the short trade. So this pattern we call it as evening star, means we can consider entering into the short trade. So now in the 5 minutes time frame, we can see that at the resistance level, if we are getting the evening star pattern, we are entering into the short trade. So once we enter into the trade, or we are going to enter into the trade, we need to always analyze the chart in multiple time frame. Okay, so 5 minutes, 15 minutes, 1 hour charts we can analyze. So this is the 15 minutes time frame chart of the Bank Nifty, and this is the EMA. What is this EMA? This is the 50 EMA. Here we can see that this is a 50 EMA. And one more confirmation we are getting. What is that? Is this price, that is on that particular day, 19th Jan, this 1035 candle. Here we can see that 1030 candle in the 15 minutes time frame is facing resistance at the 50 EMA. Here we can see that. All right. So we are getting double confirmation, that is at the higher time frame, the price is facing resistance at the 50 EMA, and also if we are getting this type of particular pattern at the resistance level, in that case we can consider entering into the short trade. So now we are going to see the next pattern, that is the morning star pattern. So morning star pattern we should get at the support level. So this is the major support for the Nifty. Okay, time frame is 5 minutes. Okay, and this is the downtrend. Okay, we can see that the price is in the downtrend. Okay, here from the resistance we can see that there is a continuous fall and price is taking support at this particular level. Okay, and the first candle is a red candle, and again if you are getting the doji candle, means indecision candle, the third candle is a green candle. So this is the pattern. This is a 3 candlestick pattern. Okay, so where we can enter into the long trade? We can enter into the long trade above the high of this green candle. Okay, this is the entry. So this is the entry for entering into the long trade, and stop loss is always the low of this doji candle. So this is the stop loss. So once we enter into the long trade, we can see that there is a move, that is up move in the Nifty. Okay. Hope this video is useful to you. Please don't forget to like, share and subscribe. Click the bell icon too for my upcoming video notifications. Thank you for watching.